All right. I hope everybody is having a good morning. I personally did not take any trades today, but I do know quite a few people that got cooked today. There was a couple setups that, were decent, but I personally stayed out of them. And I not only think it's important to go over wins and losses, but I think it's really important to go over losses that could be avoided. I think that's really, really important because at the end of the day, like you can see a perfect setup on the charts, and most of you guys are going to be able to take that without hesitation. But it's the trades that lose that were had a few things wrong with them. Those are the important ones because those will be the trades that constantly take away from your profits, and in the end will keep you break even or unprofitable. So going into the day, like I was extremely, extremely bullish. So when I'm looking at the higher time frame, clearly order flow is in favor of being bullish. If I go to the 15 minute, I see that we're making higher highs, higher lows, higher highs, higher lows. So automatically, like I'm bullish on the day. I want to see higher movement. And we had really good 1 hour draws on liquidity on NQ. We had this obvious high, we had this obvious high. This was a 1 hour and 4 hour fair value gap. Like everything looked good bullish wise. Now, leaning, if we were on the bearish side, the draws and liquidity I had this draw right here, which was, it's okay. It's not the best. But then I had this draw down here, which was, it's a lot better. It's a lot more obvious. The only thing was it's about like 350 points from where we opened. So I wasn't really expecting us to take that draw. Now, as soon as we opened, we immediately just had two Diddy candles down. We just dumped. So at this point, I'm kind of flipping my bias. I'm like, okay, we dumped this far. Now we're 200 points from the draw higher. More than likely, we're going to do something to target this draw. And what I would have been looking for is for us to go, a little bit lower, maybe create, this big 1 minute fair value gap right here, or create a 5 minute fair value gap, retrace into that, and then get something that looks, I don't know, something like that, and then catch this type of short right here. And that, in my opinion, would have been a fantastic trade. But as you can see by the chart, we just simply did not get that. We had these two fat candles down, and then volume kind of died down, and we eventually took the draw. And in my opinion, there's no safe spot to enter this trade here where you're not going to get stopped out. Like if you entered, down here, you put your stop up here, like 9 times out of 10, you're going to get wicked out of that trade. And if you did take this trade, you'd had to play a wider stop, something like this, but then the risk to reward is negative. Just overall, I didn't see anywhere where you could enter that trade. But what I did see, and this is the trade where most people got cooked on today, is we displaced past this draw. We retraced up into this 1 minute fair value gap, and then we displaced out of it to the downside, and we had this, what I think is a super good free draw on liquidity down here. And I think a lot of people agreed because a lot of people were targeting that draw. Now, in hindsight, this is my entry model. We are retracing up into a fair value gap of significance, and then we have strong displacement out of it to a good draw on liquidity. In hindsight, this is a great trade. But the reason that I stayed out of it, there's a few different things. So first of all, if we look at the morning right here, like I said earlier, we had already displaced 200 points in the morning. So you have to think of it, it's like if you were running a marathon or taking a jog. I don't really know what a far run is. I don't run. But let's say you're taking a 5 mile jog. The first 1 to 2 miles probably going to be pretty smooth. You're feeling good, feeling energetic, whatever, you're hydrated. The last 1 or 2 miles, probably going to have some sore calves. You're going to be breathing a little bit heavier. Might have to stop for water. It's the same fucking thing with the market. We open up and we are super aggressive, have lots of volume down, slow down a little bit more, have another super aggressive move, chances are after dumping that many points, we're probably not going to continue the day as efficiently. Like we're probably not going to have another super aggressive move down, which is the moves that you want to be catching if you're trading continuations. So I expected after we dumped this many points, I expected us to slow down and chop up a little bit. So that's one thing that made me hesitate just a little bit. Now, another thing that I noticed, this is super important, okay? I know, like on my screen, you'll see that I have 2 draws on liquidity. I have this draw right here, this draw right here. This is something that I want you to write down, take a note on it, look back on it a few times. In order to target the second draw on liquidity, we have to fully displace through the first draw on liquidity. A lot of times, what will happen is after we take this first draw, price is going to slow down a little bit and start to go the other way. And a lot of times, it'll just keep going. That's called a liquidity sweep, one of the basic terms of trading. So what I would have wanted to see in order to think about targeting this low is more so something that looked like, we come down a little bit further. At this point, I would know that we clearly disrespected this draw up here. And then retrace into a gap and then target something like that. And I think if that happened and you had, stop at the high, take profit at the draw, that would be a great trade because we clearly disrespected this first draw. But in the trade that actually happened today, at this point, we're still close to the draw. Like we very well could just reverse and keep going higher. And we even did for a little bit, and that's why a lot of people got cooked. And the other thing, this is why it's important to check all the time frames. I also noticed we had a bullish 1 hour right here. And that was pretty much right where that trade even happened. So I would also want to see, okay, there is a chance, even though we have a 1 minute candle closure below this 1 hour fair value gap, that doesn't mean we disrespected the fair value gap. I have to see if the hourly candle closes past it or not. And the hourly candle closed at 10 a.m. and sure enough, we were above it. So we technically respected that 1 hour gap, which is another thing. So I just, in my opinion, this trade, there was too many things building up that just made me not want to take it. Not to mention this retrace into the gap, like especially after we take a draw like this, it's just kind of choppy. Like I would want to see, 1 or 2 weak candles up into this fair value gap and then just immediately displace with one bearish candle. That would make this trade better. I still don't think it would be A+, and I personally just wouldn't have taken it. After we dumped that many points by a 1 hour fair value gap, we could be sweeping this first draw. Like I didn't like it. Now, the next trade that I saw, it was actually targeting that same draw, but it was on ES. And at this point, because of how much we're chopping right here, I was pretty much off the charts. Like when we take the first draw like that and I see price start to slow down, I'm seeing inefficient movement, usually I'm just kind of done for the day. But this trade right here, I did see it happening live and I was like, I'm just going to stay away from it, or volume's dying down. We already took the first draw. Like the draw that we were targeting on ES, this is the draw that we had already taken on NQ, this draw right here. So automatically, like when that happens, I automatically am looking at the trade as less probable because that's technically a draw that's already been taken. Now, with this trade, I can see how, if you're new to continuations, I can see how you would take this. We came up, we had this tiny 5 minute fair value gap here that we did respect. We never invalidated that fair value gap. Did we have a 1 minute too? Yeah. There was a fat 1 minute fair value gap as well. And then we chopped around for a little bit and then started immediately displacing down lower. And there was a draw on liquidity. And in my personal opinion, when I see price action look like this, especially on a retrace into a fair value gap, I just 9 times out of 10, you're going to get break evened or the trade is going to lose. Because this is a clear sign of inefficient price action. Like when I'm entering a trade, I want to see, let's say this is our draw right here, coming up to it. I don't want to see us, like, this is what I'm looking for, okay? This right here, just a quick move down into a fair value gap and just immediately go towards the draw. I do not want to see something like come up, form the fair value gap. I don't want to see something that looks like that. That's not what I'm looking for, okay? When trading continuations, I'm looking for high volume moves, I'm looking for quick moves, and I'm looking for efficient moves towards a strong draw on liquidity. And in this case, not only was price action not efficient, but you're targeting a draw that has already been taken. So I think, with both of these trades, I do not consider either of them A+. I don't think they're trades you should be taking. Maybe on an eval, sure, whatever, do your thing. But in my opinion, these trades were very easily avoidable. I stayed out of them for a reason. And I hope that this video was very helpful in terms of, educating you on why, like, certain trades might look good in hindsight, but if you actually look at the context behind those trades, they're trades that you should avoid. My entry model presents itself, 3 or 4 times a day. My entry model is on my screen all the time, but it's the context behind that entry model that makes the difference. Do you have a strong draw on liquidity? Have we already dumped 200 points in the morning? Is price action moving efficiently? There are so many things that make a good trade, and this is what holds people back from profitability, is they're just pattern trading. They're taking that entry confirmation whenever they see it, but they don't actually realize the bigger picture, which is 10 times more important than the entry confirmation. So if you guys have any questions at all about any of this, if you took that trade and want to kind of go into it a little bit further, let me know in the comments. I have a link to my Discord in the description. It's completely free, and there's a category in there where you can send in your trades. I will review them. I will tell you exactly why that trade failed, if it was a good win, whatever it is. And I post my bias every single morning. And while these trades were forming, I posted in my Discord, I don't like this at all. So that's another thing that could have saved you that loss today. So definitely go check out the Discord. But yeah, I will see you guys tomorrow morning for Market Open.